Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall. I'm Eric Auskerson, one of your hosts for today, and with me here in New York is Lisa Simpson. Great to be with you, Lisa.
It's been a great week up here. We've had lots of exciting stuff going on, so I'm happy to be here in studio with you, Eric. It's always fun.
Always fun. And Lisa, we've got a great program which the team has been working hard on. We're going to kick things off with a DC update, which is going to include an extensive tax debrief with the leader of the tax area of the AICPA, Ed Carl. And then we're going to be talking about how to add value in the tax arena. You're going to be leading that discussion. And then we're going to conclude with a discussion that you and I will have with Tom Hood, talking about this innovation event that we just held here in New York over the past couple of days. And we'll close with our open forum. So here's the lineup for today. I'd like to introduce Ed Carl now. Many of you know Ed. He's been on many town halls. And Ed, it's a busy time of year for you and your team. And Ed leads the taxation area for the AICPA. So welcome, Ed.
Thank you, Eric. Great to be here.
Well, Ed and Lisa, we're going to kick things off and share the results. One of the results from last week's poll. And as we can see here, we asked what were the top challenges this tax season. Number one is finding and retaining staff. One thing we'll be talking about at the end is technology and how technology can help with some of those staff issues. I mean, Lisa, when you look at these results, maybe some of your thoughts?
Agreed. I'm looking forward to the conversation about how technology and innovation can help relieve some of that staffing pressure. But I'm also glad Ed is joining us, because clients missing deadlines, that practice management topic that we've been talking about on previous town halls, definitely coming into play there. And then changing tax laws or guidance. It's a great topic for us to talk with Ed about. So Ed, your timing is impeccable.
Always is. All right.
So Ed, with that, let's get right into the DC and profession update. And what we try to do here in the town halls is always, talk about breaking news. And I don't know if this is breaking news, but it's the process that's been evolving related to the confirmation hearings for the nominee Danny Werfel. But I know the Senate was holding a vote today related to this.
Right. So I thought I would have breaking news for you, but I don't just yet. So 2 weeks ago, the last town hall, Congress went on recess for President's Day. So they were gone last week. They're back this week. The activities picked up. As you said, Eric, we thought there would be some breaking news about Danny Werfel. His confirmation hearing in the Senate Finance Committee was actually the morning of the last town hall. And I think we gave a little bit of news. Things went really well. But the chair of the Finance Committee, Wyden, would not put up his vote in the Senate Finance Committee. So it goes Finance Committee, then to the floor of the Senate. He would not have put up that vote unless he thought he had the actual numbers to make sure that Danny Werfel passed on to the full floor. That vote was scheduled for this morning. As you said, we thought we would have some breaking news, but a few minutes ago I checked and there was no breaking news. They had not taken a vote. There might have been a quorum question in finance to take that vote. I don't know if there is court intrigue or just a busy week back from President's Day recess, and members have double and triple duty all over the Capitol Hill. So we'll try to find out. I'll keep an eye on my phone to see if there's any breaking news about the confirmation hearing. Frankly, I thought about the vote. His confirmation hearing went really well. I expected that there would be bipartisan support. Frankly, there were two Republican members of finance who had indicated at his confirmation hearing that they would actually vote for him and pass this on to the full Senate. So we'll see if it's intrigue or if it's just being busy, and we'll keep an eye on this.
Well, Ed, I know when he was the acting, commissioner many years ago, you actually did interact with Werfel. Any comments on just how you see him potentially kicking off his term at the IRS?
Well, he was acting commissioner a number of years ago because it was a turbulent time at IRS. They had gone through these Lois Lerner scandals regarding the exempt organization application processing. And we did work with him directly while he was there, and we had a good relationship, and seems to be the right person with his background in IT, specifically working with government. So that is a big issue and something that we support, moving the agency forward. Well, I don't know what century they're in now with their IT, but it's old. It's old, and his background is the right background to help move them forward. So we'll see what happens.
Well, he definitely has a big task at hand to continue to involve all of the IRS technology issues. So here, Ed, we've got a long list here of different tax related topics. So I'll let you take us through them.
So debt ceiling is the first one I want to mention, and is something that we did talk about at the last town hall. No substantive movement on the debt ceiling. We know that Treasury Secretary Yellen has indicated that they are currently using extraordinary measures until it's a guess. They don't know exactly when their ceiling of debt that they can use will expire. It's something around June, they believe. They've used extraordinary measures, or using extraordinary measures right now, which means that there's certain in-house debt, if you will, that they're postponing paying on, which they can make whole once the ceiling is lifted. The Republicans want to have a conversation about the amount of spending, and that is something that has to be done, although the Democrats would like to see a clean vote on the debt ceiling. So we'll see what happens. There hasn't been any substantive movement on that, and I suspect that won't happen until late spring. We are seeing some political dance, though, in Washington, with Patrick McHenry, who's the chair of the House Financial Services Committee, sending a letter to Secretary Yellen asking for more detail about, they call it the X date, when the actual debt runs out. And so that is an important thing to him. Also, Ways and Means Chair Jason Smith has published an op-ed about this whole balance of the debt ceiling paired with spending cuts. So we're seeing the dance going on right now.
And if we move on into Section 174 and other tax extenders, the very first question we got today in our Q&A was about what's the chance for tax extenders?
All right. So that's I've had this question, Lisa, probably every year for the last 30 years. It's normal for Washington. So we have provisions that expire or provisions that are temporary. Yet, even though everyone knows that they're temporary, everyone expects that they are extended. So some of them clearly are provisions for economic reasons that are temporary, and there's no reason to think that they would be extended. Some of them are temporary just because Congress couldn't afford to make them permanent at the time that they were passed. So some have a reasonable reason to ask, some maybe not so reasonable. 174, every town hall, other questions. I get calls from members. They want to know what to do. So unfortunately, I don't have a solid answer other than to say that 174 is at the top of the list of extenders, even though it isn't literally an extender provision, but people want to see the expensing aspect of 174 continuing, and it's something that we support. AICPA recently sent another letter. We've sent several letters about 174. There still is interest, bipartisan interest, but until there's a vehicle, a possible vehicle could be the debt ceiling extension, although I frankly doubt it. So the answer is the usual answer: extend returns that might be impacted by any of the extenders or by the expensing issue of 174. Extend those returns as long as you can, and then live to deal with it another day. That's the best we can give advice. I will clearly tell you that should something move, there will be a lot of news coming out of AICPA and future town halls.
Yeah.
And Ed, just there are a number of questions that, as Lisa mentioned, coming in related to Section 174. I just want to reference to the audience that we did have a good session last week on this, and we've got that archive. And there were some really good practical tips related to this.
Yeah, and I've got links for you. If you did not join us a couple weeks ago, I've got a slide that has links, so we'll catch you back up today a little bit later.
And disaster relief, that's probably the next biggest question that's been coming in so far, Ed. Lots of questions on where that stands.
So we'll talk about disaster relief from a legislative angle and also from an administrative angle. So one of the things I wanted to mention about disaster relief, and frankly, we're talking about regulation of repairs, LIFO relief. AICPA continues its very busy activity on Capitol Hill to look for opportunities for legislative provisions that we have a strong interest in. And those three that I just mentioned have been something that we've been pushing for a while. Disaster relief and regulation of repairs. LIFO is a little bit newer, but disaster relief, we've had 10, 11 provisions that we have been promoting for a number of years, and getting some legislative fix for those items to make some of these changes permanent. So, for example, we'll get calls from some of the states, Florida, for example, which regularly has hurricanes, and they want to get a little bit of relief from some of the loss rules, and sometimes disaster losses have to have an AGI floor, and so we've had a provision to remove that for disaster situations, for losses, for people who really need some help. Unfortunately, those require specific legislation. I know in the case of Florida, there was a bill introduced today by one of the Florida representatives to provide that relief in the loss area for, I think it was Hurricane Ian. But those come up all the time. So those are things that we're busy with and trying to assist a lot of members. Look, the disasters, most common call I think I get for years and years, because there are disasters all over the country all year long and affect almost all of the states.
Yeah.
Going on, Ed, you got a couple of other legislative update items
Yeah,
here.
I wanted to talk about the agenda for Ways and Means. So I said that they were on recess last week. They're back, and a lot of important information coming out. We knew that this was going to happen. We knew there was a lot of interest, and with the new chair of the Ways and Means Committee. So there is a list of items impacting the IRS that they are planning to hold hearings on. Number one is the $80 billion in funding received through the Inflation Reduction Act last summer. IRS is making plans for what they're going to do with that money. That's something that we've been involved with. We also have another letter that's in draft form regarding that $80 billion, but we've met with IRS about it. they need a stable level of funding to be able to do something with their IT. You talked about technology and innovation, and we've mentioned about bringing their technology up to date. That's something that this $80 billion can help with. That's part of Congress's responsibility, is to provide oversight, and we support that. And talking about that $80 billion is at the top of Ways and Means list. Other things, and this is related to the $80 billion, we know that a large chunk of that $80 billion was going to be used for enforcement and examination, and there was a promise not to raise audit rates for taxpayers making $400,000 or less. So there's a lot of give and take in that $400,000, raising audit rates, increasing audits, hard time. We know that there are taxpayers who should have higher AGIs than $400,000, but through some kind of inappropriate manipulation are below. So how do you bring that into the data mix? But that's one of the hearings. Another area is something that we've commented on recently. We know we've gotten a lot of questions from members, including on the town hall, regarding 1099-K reporting thresholds, which dropped to $600, which is incredible to think about, from $20,000 and 200 transactions to $600. We've pointed out that the $600 threshold, which is used in other areas, for example, with the 1099 miscellaneous or NEC, that $600 number is from 1954. We've indicated that that number should be subject to COLA, cost of living adjustments. So if you did apply cost of living adjustments to a $600 number from 1954, it would actually be up closer to $7,000. So that's something else. IT monetization is another area. Tax-free, a free tax return e-filing system. IRS's treatment of exempt organizations. Those are all levels of hearings that we expect them to talk about. The last thing I'll mention about Ways and Means is they usually do a filing season hearing the week before filing season ends. The week before filing season ends this year, Congress is not in session. So good for our chair of our executive committee, Jan Lewis, if they invite us to testify, and they have sometimes invited us to testify. It looks like that hearing will be after April 18th this year. So that's good news for our leadership. But we expect to see that hearing, regardless of the exact date. We'll look at that as an important hearing.
That's a great lead in. I'm sorry, Eric.
Yeah.
How is tax season going so far? Based on what I'm hearing and what we're getting through the town hall community, it doesn't seem as chaotic as the last couple of tax years. So what are you thinking? How's the IRS volume holding up, and how are things going from your perspective?
We've done some reach out. I've spoken at a state CPA Society town hall. Things seem to be relatively quiet. Although, all right, I don't want to hold my breath on that one. Things were so horrible the last 2 years. We know that. Our members know that. But what we're seeing is that it's relatively quiet. Interesting, you had that poll results slide up as we came on, and I saw that things on people's minds. So IRS service levels was 7.5% of the respondents. So I think that's good news. I'm not 100% sure, but we'll keep an eye on that. And frankly, we do a poll every year, or a survey every year, statistically valid. It goes out to a lot of our members. So look for that survey. It'll come out after busy season is over, asking for a number of questions that we've tracked year over year to see how service levels at IRS are. So look for our poll. Lisa, I do know that several issues that have come up. So we've heard some questions about practitioner priority service line. We know that it seems that call wait times are down. It seems as if service is picking up. The question I have is whether that applies to the practitioner priority service line as well. I'm getting mixed results on that. Some people saying they're having good results. Some are saying it's no change. So we'll keep a close eye on that. Another area is K2, K3. There's still some question about that. Some folks have told me that they're having some challenge getting their software to manipulate to the answer that they believe is the correct answer. And I don't use the word manipulate in a pejorative sense, but trying to get to the right results for K2, K3, it's a little bit challenging. Some people are saying they're doing okay and getting used to it. Some saying they're having challenges. Another area that's challenging for folks is in the pass-through entity tax. We knew that there were additional states that came online with new provisions last year. And so now you have to report in those new states, particularly investment income seems to be a bit of a challenge. So Lisa, I know that you're going to point members to some of the resources we have available in this area. So
real-time feedback, Ed. I'm glancing at the Q&A as they're coming in, and it looks fairly positive in terms of getting through on the call line. So, and Jan Lewis stands ready to come to DC whenever y'all call. She's already raised her hand.
I appreciate it.
Yeah, I mean, a lot of positive comments about the pickup time improving dramatically, but there's some comments coming in about some of the agents that are picking up maybe don't have the experience. Yeah. So they've got more people answering the phones, but then there's some comments coming in of they're getting very helpful people on the phone as well. So it's mixed.
Yeah.
Let me just jump right through a couple of quick items as we wrap up this section. IRS put out a notice 2023-21. It has to do with the extension from 2020 and frankly also from 2021 of the due dates from April 15th to July 15th in 2020 and then May 17th in 2021. There was a question about filing refund claims, and there was an oddity about a disaster postponement versus an extension, and IRS fixed that for the April 15th due date in 2020. Frankly, though, we have broader questions. So, for example, folks in California, Alabama, and Georgia had extensions all the way to October 16th, broad extensions. So we have the same question that'll come up in 3 years from now. So we're trying to get that fixed. And I would caution all of our members, everyone on the town hall, to keep a glance at the IRS disaster page because they're making changes to disaster postponements all over the place. And so you should keep track, especially if you're not in a state that has disasters, but you might have clients in a disaster location. You need to keep track of those. Another thing, and maybe let's just jump ahead to the next slide. I want to mention something about the Supreme Court ruling in the FBAR situation. So this is a pretty big deal because it's an egregious, frankly, penalty, $10,000 penalty. So the question that came up to the Supreme Court was, what does the penalty apply to? A foreign bank account, or does it apply to the foreign bank account reporting form? And we had this taxpayer who had 272 foreign bank accounts for which he did not report. That's a $2.7 million penalty. His claim was that it should apply only to the 5 years of reports that he did not timely file. So that would be a $50,000 penalty, not a $2.7 million penalty. And so there was a split between the Fifth and Ninth Circuits. It went to the Supreme Court, and Supreme Court ruled in favor of the taxpayer, Bittner, for non-willful violation. So that's a big deal. And let me close with one thing, Lisa. This is something both of you, Eric and Lisa, know from 2020 when the town halls first began dealing with PPP loans and having conversations behind the scenes with the Treasury Department to try to help everybody implement law. And we knew at the time that there would be some level of fraud. We didn't want it to be, but it was a balancing act between speed to get relief money, $5 trillion worth of relief money out to taxpayers, and help our members, help their clients, help themselves in some cases. And we knew fraud would be a problem. Well, the administration just announced today that they would be including a large sum of money in their fiscal year 23 budget, which will come out the early part of March, to attack that fraud. And we heard firsthand that we knew there would be fraud. Unfortunately, the goal was to help the population quickly, and we'll go after fraud on the back end. So
Ed, I think that's well said. And just, the strategy back in 2020 was, self-affirmation, where people, self-certification.
Yeah.
And it's really not a surprise. I mean, they're putting 1.6 billion forward. Look at, what was just provided to the IRS related to enforcement. So you have, people self-certify their tax returns, and then there's enforcement, and there's $5 trillion handed out, and now there's going to be enforcement. So, and the good news is the firms that worked with their clients, I think they're in a much better position than someone who might have paid attention to something on social media about, going after some program that they shouldn't have, and they potentially applied. And you always have the fraudsters out there as well.
And a lot of it is in unemployment and, state unemployment claims, billions of dollars of fraudulent state unemployment claims filed. And those are going to be, probably harder to track down, but you've got PPP, you've got EIDL, you've got all of the other programs. So $1.6 billion should hopefully help claw some of that back.
Yeah. And a lot of those unemployment false returns were caused by offshore entities. Mm-hmm. So it's good. It's good that the government is looking into all of that. Hey, Ed, I'll give you one question, and then we'll probably take a couple more in open forum. But people wanted you to hit on LIFO relief. We skipped over that bullet.
The LIFO relief is legislation to assist auto dealers with some issues that they had with supply chain problems over the last couple of years, and they're getting a sort of a strange manipulation and inventory calculation. So we were supporting legislation. I believe there were 2 bills that were recently introduced in that area. So it's something that we continue to push. But I think, like most things right now, the question is what kind of a vehicle. I don't expect that those bills would be able to pass on their own. They'd have to have some kind of a vehicle to be attached to.
So Lisa, Ed, that was a great legislative update combined with a lot of tax updates. We're going to continue this tax theme for our next 2 town halls on March 23rd. Carl Peterson, Frank Ferrelli will be talking about, Secure Act 2.0 plus other items. And then, Ed, we've got the National Tax Advocate joining us on April 6th.
You're on mute.
So we'll.
It happens to the best of us.
That's why we have Lisa in New York.
Yeah, I think I'm in the middle of a crime scene. There are police and helicopters, always trying to keep the noise out. Jan will be interviewing Aaron Collins. They work together and have a great rapport. So that would be a terrific town hall in a couple of weeks.
Perfect. Thank you. Really quickly, I'm going to go back and just make sure that I remind you about the resources that we have around some of the more challenging topics that we're hearing our attendees talk about. So Section 174 we hit on briefly. Please do make sure that you access these resources. Great conversations with practitioners who are in the trenches dealing with these issues with their clients. So you'll get some really good insights there. K2, K3, there continue to be some challenges and confusion. There's a fabulous podcast that I've brought up on the last several and town halls. I'm just going to keep talking about it because it's amazing. And then same thing on pass-through entity tax. I saw one person say, let's just swap out PPP ERC from last tax season and put in 174, K2, K3, and PTET. Those are the big challenges this year. So we've got some great resources there. So thank you, Ed. I appreciate your update this town hall for us. Eric, I'm going to switch a little bit and dig into a conversation about how to take all of that work that you're doing with your clients during busy season and add additional insights and value to it. So I've asked Dan Snyder, who's a director in our personal financial planning section, to join us. This is Dan's first town hall, so welcome, Dan, and thanks for joining us. Give us a little bit of background on yourself, and then we'll dig into our topic.
Sure. I, as you mentioned, director of the personal financial planning area, so we oversee the personal financial planning section as well as the PFS credential. Been with the association for about 16 years now, and have been heavily involved in the financial planning area in qualified plans, investments, insurance, in a variety of areas like that. So it's an exciting area. I'm very passionate about this area for CPAs.
And you're already getting cheers from the audience, so that's good. I asked Dan to join me because I was having a conversation with a partner in a good-sized firm about a month ago, and he was teeing up his team for tax season. And he was challenging everyone to think about, when you deliver the tax return, are you just delivering the tax return, or is there anything more to add to the conversation? And if there's nothing more to add, then we're probably not asking the right questions or doing the right service, or it's not the right client. So I asked Dan, okay, let's talk about that. How can you really start adding value into those tax services and delivering something in addition to the tax return?
Yeah, there's a tremendous synergy between the tax planning efforts and the overall financial planning. And I thought maybe as a way to get into this would be to use a very popular topic today is Secure 2.0. And we've talked about this in previous town halls, and as we know, we're going to be talking about it in the future. But I didn't want to go through all the details of Secure 2.0, but I wanted to really illustrate how things that come up in a tax legislation and its highlights in the news are really opportunities to, do the immediate reacting to what's happening. We need to communicate the rules, communicate the tax consequences, but then there's always an opportunity to pivot there into a larger conversation with the client. So, for example, if you're talking to individual clients, then the topic in Secure 2.0, we all know that required minimum distributions, RMDs, the age changed. Let me just share a quick nugget here that I found that I thought is a great way of looking at this, because so much has been written about the RMDs, and they go into effect on this particular date, and they and it's just confusing over the dates and the ages and all that kind of thing. And what it really boils down to is a chart on the right. It's based on when you're born. If you're born in 1950 or earlier, then your RMD age is 72 or 70 and a half. Whatever you had in place, you don't get to change, you have to keep on going. If you're born between 51 and 59, your RMD age will be 73. 1960 or later, 75. This really allows you to be able to start to think about planning for the future, when the RMD age kicks in and what it is. But when you put on that hat of the holistic planning, and as you said, beyond the rules, beyond the tax consequences, the question maybe that you can ask with RMDs is, just because I can delay, or should I delay distributions just because I can delay contribution or distributions? And so when you start thinking about that, what are those factors? And these are factors that CPAs talk with their clients about all the time. It's nothing new here, but these are the types of things that go beyond just the tax implications and get into how does this affect the client's personal situation? What are their cash flow needs? RMDs may be irrelevant if they're using more than their amount. The multi-year tax liability. It's great that you can save taxes now, but if you save taxes for a short period of time and pay higher taxes for a long period of time, the multi-year tax liability is not in the client's best interest. So maybe it ought to be looked at. Legacy, charitable goals, Social Security taxability. Who wants 85% of their Social Security to be taxed? And Medicare surcharges is really a hidden drain on retirement income and retirement expenses, because the Part B and Part D are triggered by the income. And again, if you have high incomes in later years because you've delayed, then potentially you're going to have a lot of years with some high Medicare charges. So what this all comes back around to is, don't talk just about the rules, but talk about these factors that then, kind of dictate what kind of strategies might be in effect here. Should a systematic series of Roth conversions, or perhaps if your client is philanthropically inclined, then maybe you don't care about the RMDs because they're going to use qualified charitable distributions as a way to get out of it because they don't need the income. So taking the bigger picture can really benefit.
That's a great point. A couple of things, Dan, real quick. I want to call out that there's a lot in Secure Act 2.0. We've talked about it on previous town halls, but Dan has provided in today's resources a 2-pager that goes through a lot of the highlights of 2.0. So I know we're talking about a lot of changes, but there's a good resource for you. Make sure you get that from the materials. And then Eric mentioned earlier that we've got another conversation on our next town hall that digs into a little more of the retirement plan Secure Act 2.0 changes, which is I think a great topic to lead us into the next slide.
Yeah, I think, and that's perfect because we talked about individuals. You can apply the same concept to your business clients. And you think about qualified retirement plans, on the right-hand side, you see just a small list of the, numbers of changes that happen in Secure 2.0, auto enrollment. I'm not going to read them all, but you see them there. And there's some great opportunities there to really tailor plans to meet your client's goals. So beyond that, immediate is really asking the questions, what are your client's goals with respect to qualified plans?
And excuse me, Dan, you've got some great resources in the PFP toolkit that you've got built out around Secure Act 2.0. I want to get a little bit more into what do we really mean when we talk about integrating tax and PFP. Is, do all of our clients want this type of integration? And, back in the day when I was doing this, if you said personal financial planning, I might have thought you want me to go start selling investments. So let's dig into what you really mean by this.
Sure. I think that's one of the things that I hear a lot sometimes is you say financial planning and you immediately think about investments, and it's kind of like putting the cart before the horse. And, because if you don't have a solid plan in place to deal with issues like you see on the screen, retirement, estate, risk, investments, then you're not going to be in a position to be able to really connect with your clients. And so that takes discussing goals and that type of thing. So having those conversations is really a great place for CPAs to be in, because you can have a tax conversation with your client and not do holistic planning. Now you're going to leave items on the table and they're going to go elsewhere to get those questions answered. But on the other hand, if the client is interested in that holistic, and you're looking at holistic financial planning, you can't do true holistic financial planning. You can't talk about these topics on the screen without considering the tax implications. And so CPAs are just in a uniquely qualified position, because many times with your individual clients and your family clients, you're already having these conversations. So the idea here is really just taking it a step forward. And these, we talk about hard trends and some of the things that are happening. technology and how do we deal with the technology and what's that mean for our human side of things. We talk about generational changes. The next generations, there's multiple generations in the marketplace now. They look at data differently. They look at relationships differently. And when you think about it, financial planning is at its heart, it's a relationship business. It's a relationship with the client. It's creating an environment where there can be an open discussion about what's changing in the market, in the laws, what's changing in the client situation, and bringing those together. And that's something that deals with the technology trend, because those are things that you can't replace. And that's exactly what they're looking for in the next generation piece of it.
So, Dan, it's filing season, in case we had forgotten that part. And I know that a lot of our audience is thinking, how am I supposed to do this right now? How am I supposed to be capturing this kind of information and having these deeper conversations with clients? So the good news is, Dan, you brought some resources.
Yeah, we never forget that it's tax season by any means. So the two things that I'd like to share here. One is that we have a tool, and it's open to all the ASCPA members, is called our personal finance scorecard. And it is something that it's not for the practitioner, it's for the client. And it's something that they are able to complete and score themselves on a variety of questions that relate to all of those areas of financial planning we talked about. And it allows the clients to get engaged in the process, opens the door for post-tax season conversations, and prioritizes those conversations to really connect with the client. So I would encourage, take a look at that. The links are on the deck here to be able to deliver that with your clients, as with the tax returns and that type of thing. And then after tax season, we have another tool called the analysis of a tax return. That's a checklist that provides those financial planning discussions. So use that as a prep tool when you sit down with those clients and have that conversation. You really drive those conversations there.
Yeah. And I know you and Eric have been talking about some of the technology resources that can enable these kinds of conversations.
Yeah, I think, a lot of this stuff, it feels like an intangible thing. We just have these conversations. Anytime we have something tangible that provides structure to these types of conversations, I think it's a real win. And CPA.com has rolled out a preferred partnership relationship with AssetMap. And it's a company that provides a platform that quickly organizes the financial situation of the client and presents it back in a one-page snapshot. And it's a really interesting thing because it allows you to see what's missing, and they actually prompt you when they see that something's missing. You may need to ask some questions. And it's great for the client because they see it all in one place. It's great for the practitioner because they're able to do it all, be everything there, see everything in one place, and have those conversations. And we got a variety of other resources too. So
yeah, so some workshops and some podcasts too. I love podcasts because you're bringing in your peers to talk about how they're actually doing this in practice. So a lot of great resources there. And Eric, I don't know if you've been involved with Dan in this space for a while. Anything you want to add?
Well, I think Dan said it very well, but what tools do is help, evolve strategies. I mean, what Dan, you just covered and Lisa just covered, the most important thing is to think about the integrated planning area for both the tax and financial planning services, and then look at tools that can help you execute that plan. And we're going to talk, this is a good segue into our next section, Lisa.
It is. It's a perfect segue. And we are so happy to be joined in studio by Tom Hood, who so many of you know. Tom, thanks for joining us.
Great to be here.
And Dan, thank you. You're getting kudos from the audience, so we appreciate you sharing some insights. And we'll have you back at Open Forum. All right.
Well, why we're all together is because we've been here in New York this week with our Startup Accelerator companies, and this is a program that we launched now, 5 years or so ago, And really what it's all about is driving innovation. And one thing that I think about all the time is the ecosystem of companies that are really transforming the practice of finance and accounting. And what we're trying to do with this program is to really encourage entrepreneurs to bring solutions to all areas of the practice. And what our 2023 cohort highlights are solutions in the audit area, in the tax area, in the client accounting services or client advisory services area, as well as some tools for the corporate finance department, Tom. So this is something that is important. You know, there's been billions of dollars invested in solutions for firms and finance professionals. And just at the AICPA.com, we want to encourage this. And we also, with this program, we provide them direction and information on how best to work with the firms. And one thing that Tom, talked to you a lot about is how, you know, they're really partners with the practitioners. And you've got a long career in leadership for the profession. I mean, you've seen a lot of evolution in how these companies work with the members.
Yeah, I mean, you know, we are getting into an age where I call it the Cambrian explosion. It's just a massive explosion of new technologies. And as you can see, you can't really tell what they do all the time by their name. So you need an interpreter. And that's what I think the role that you're playing at CPA.com, Eric. But for all of us out there in the practice community, it is about getting to know these folks and thinking of them as a strategic partnership as opposed to a vendor trying to sell you something, because these applications are doing a lot of things that software didn't used to do. I mean, this year I could see a lot more AI built into them. Yeah. It's really interesting watching this evolution and what you're doing with this ecosystem.
And Lisa, one of the things that we talk a lot about with these companies and with the members is that the key to success is really putting in place the strategies in the evolution of your practice to support these new capabilities. Because it is by no means just picking the right solution. The success driver is actually saying, okay, how can I work differently? How can I increase the value in the services I'm providing to my client? And then I obviously need to leverage technology to help deliver that.
Absolutely. We are focused, a lot of our time right now is focused on helping firms understand how their business model has to change in a transformative way. And these advancements are really going to drive a lot of that. We see it, but it has to be strategy, to your point, strategy, discipline, and capabilities, right? That's what we keep talking about when we talk about practice management.
So, you know, post tax season, we'll probably have a session, Tom, on what are some of the key services that we offer related to advancing your client advisory services practice, your audit area, your tax area, or an area that you're thinking about every day is the finance department.
Finance. Yeah. I mean, and the software in that arena is exploding, whether you're a middle market company or you're a big giant Fortune 500. So it's happening everywhere. And goes back to 20 years ago plus. Technology is the number one driver of transformation in our profession. It always has been. Now it's accelerating even more. And then I would argue the pandemic, you guys wrote a paper, I think calling it the Great Acceleration. Right. This stuff's accelerated even more now. So it's really time to be thinking strategically about how can I use technology to really help my practice and my clients. It also could help solve a little bit of this talent shortage by being more effective with workflow, and you'll save on staffing side. So lots of opportunities going on there.
Right. So just to conclude this, what I would say is that when I'm talking to some of these progressive firms of all sizes, so it's not small firms, mid-sized firms, or the largest firms, it's the progressive firms. And when they put some of these new capabilities in place, it energizes their staff, it excites their clients, It drives efficiencies. So it's just good for us to be here, kind of learning from those companies and sharing with them how best to work with the members. So Lisa, I know we've got a couple of other topics that you want to cover here.
Well, Tom and I were talking throughout the course of the week and kind of in the back of the room about how exciting this is in terms of making the profession more attractive to younger people, because they are truly looking for a technology environment that is not just doing remote or doing rote work, ticking and tying. They want to have something that they know there's a better way. And these advancements, I think, are really going to make the profession more attractive. That ties into the CPA exam evolution that you've heard us talk about on previous town halls. And if you're not familiar with that, basically in January of 2024, the format of the CPA exam is going to change, and there will be 3 core components, and then candidates will be able to choose from other disciplines that they want to take, and one of those is around technology. So this all ties in perfectly to those conversations.
And we're hearing from young professionals who are like beginning to enter the profession, who are saying they're actually checking the tech stack of the people they're interviewing with, because they want to make sure it's a modern, up-to-date tech stack, because if it's obsolete, they know that they're going to be learning obsolete technologies, which will then in fact affect their future employment, right?
Yeah.
Whether that at that firm or another one. So that's a really big component that we're talking about. And quite frankly, many of them are ready. Like a lot of them know RPA and data analytics. So you could actually leverage them to really solve some of these talent challenges, right? Which is a big question that keeps coming up.
Yeah, we've been talking a lot about talent challenges. And Tom, I wanted to get your perspective, because you and I were at a strategic planning session for a great firm a year, half or so ago, and the subject of 150, 120 came up. And you had a really interesting perspective on the topic. So I wanted to kind of dig into that a little bit with you.
I remember that well. That was it. That was for you and I working together, a great firm. And the partner's like, Tom, why do we have this 150-hour thing? So my background is, until I came to the AICPA 2 years ago, I was a state society executive for 24 years. So I actually enacted the 150-hour law in Maryland. And then I've had partners ever since then talk about, why do we do it? What are we trying to do? So the biggest piece about this right now, because I know everyone's saying, let's go back to 120. But when we put the 150 in, Sarbanes-Oxley happened shortly after that, when it got in pretty much all the other states, around 2000. And at that stage, the regulators, state boards of accountancy in all the different states, because that's where the exam goes, that's where we're regulated, they started to crack down on who was licensed in their states. Basically, they didn't want another Enron to happen on their watch. So when that happened, we went and had to get reciprocity, because what was happening is there was little differences in all those laws. And that meant you had to license in every state you were going to practice in, both as an individual CPA and as a firm. So now we were the first profession to be completely mobile with reciprocal provisions in pretty much every jurisdiction and state. Bar none, not the lawyers, not doctors, not nurses, not engineers, not even architects. Architects have since caught up. But we were the most mobile profession there is as of this past year. Now we're talking about states saying, well, maybe we should start pulling this back to attract more talent. Well, when you pull it back, the first state that does that is going to break the reciprocity piece. That means those CPAs in that state, say it's Maryland, then we would have to go, and I'm practicing in Virginia and Delaware and New York. I'm going to have to get licensed in every one of those states. This isn't through the state CPA society. This is through the state board of accountancy in those states, which means they're going to say, oh, Tom, so you want to practice in Delaware now? Okay, send me your exam results. Like, what do you mean? From 40 years ago? So you're going to have to go to your home state board, get those exam results, and get them over to the other state. And then the next question they're going to ask, send me your college transcript so I can prove the 120 credits you have meet our criteria about those. So my point is, it's a state regulatory construct, it took us 10 years to get them all uniform under the 150. It will probably take us another 10 years to get them some form of uniformity if we start this kind of moving around with that. So to me, I would say that's craziness, because is that going to solve the problem immediately? I don't think so. I think there's other things that we're all working on, like our 8-point plan and working with some of these states and other groups. I think we have to creatively solve this problem. I think technology is another piece of it. But to me, that's what we need to do. And I think when we said that, the partner said, I hadn't realized that was the real issue.
Right.
And they thought it was something that like the state societies and the AICPA could come together and do. Well, yes, we can, but we have to implement it through law and legislation and regulations. And that's what takes time and risk.
And it can be outside of our control.
It's way outside of our control.
Okay.
Well, Tom, I can tell you you've generated a conversation with our town hall community here, and this is something that, Lisa, we're going to continue to discuss. But thanks for bringing that perspective here. Let's bring Ed Carl and Dan Snyder back up and move into our open forum section. And Ed, you probably saw this result, but I want to give a shout out to Gail Perry, who's the editor-in-chief of CPA Prax Advisor. She sent in an update to us via the Q&A, and the Senate did approve moving forward with the Werfel's move to the full Senate with a vote of 17-9. It was bipartisan. 3 Republicans voted for it. It was done off the Senate floor, Ed, because as you noted, they failed to reach a quorum this morning. I don't know if there's anything you want to add. You probably got some alerts from the DC team as well.
Yeah, all of that was happening while we were talking tax early in the town hall. So, approval by the Finance Committee, 17-9, and we'll find out exactly when, but it's possible next week to move to the full Senate floor, because they'll need just a simple majority to confirm him.
Well, Lisa, we've got a few hundred questions. Is there one that you want to pull out before we move to our final section? But thank you for the dialogue. We love this input, and we do leverage this in our planning.
Dan, I think we're going to have you back on, because we've got lots of questions about how to, continue this journey of moving from just delivering the return, delivering those insights. Within the PFP credentialing process, there's some pathways that might be of interest. If you could just pull out one in 30 seconds, where should people go if they're interested in learning more?
Sure. The one I would really point out is the latest one. It's our PFS credential experienced CPA pathway. What we've done is we've recognized the higher level of experience that many CPAs have in this area, and we've streamlined the education and the exam process to be able to make it easier. So I encourage you to take a look at it.
Perfect. Thank you.
So with that, let's move into just the final slides here, Lisa. We've got our summary slide here, a lot covered. Ed, Carl, thank you for your updates. Dan, thank you for your updates as well. And Tom, great having you here in the New York office with us. We've got the Town Hall on-demand archive links available to you. We already mentioned that we did talk a little bit about Section 174 on the last Town Hall, February 16th. So here's that link. Please do leverage our AICPA Town Hall portal resource. We share breaking news there, and we also send out a newsletter following these town halls, summarizing some of the hot topics. So Lisa, we're going to be back with the community in 3 weeks. We just, giving them an extra week here during this very, very busy time of year. And then we have the next one following that on April 6th, where we'll have Aaron Collins.
Yeah. And of course, if anything breaks that we think you need to know about, we'll be in touch with you. But just wanted to give you a little bit of extra time back around that March 15 filing deadline, and keep your chin up.
Great being with you. Have a good couple of weeks. We'll see you on March 23rd.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts, Thursdays at 3 p.m. Eastern Time.